Okay. So can you please send me the journal entries that I asked you last class to do your homework? Can you please send it to me? You can send me a
Okay.
picture. You can send me a picture in a chat box so I can see that.
Excuse me, you means like what you sent us on the screen, or you want the homework that we did?
I do not need an answer. I just need a screen so we can do the journal entries, the source documents.
One second.
Yes.
Nó đây luôn.
So let's start with the first journal entry. So the first journal entry is a purchase raw material. I mean, the source document. You have to tell me journal entry, right? So purchase raw material on credit with 10% discounts at 1,000. So tell me, what is debit, what is credit? Anybody?
The debit is a material account, 1,000.
You have to speak very clear. Raw material accounts debit.
Raw material account debit for 1,000. Account payable credit for 990.
Yes.
And discount received credit for 10.
Yes. 100. Yes.
Yeah, 100.
So raw material purchased raw material. I'm writing abbreviation raw material, but in your exam you have to write full RM, not RM, raw material. So purchase raw material accounts debit, right? Accounts payable, accounts credit, and discounts received, right? Discount received credit. So raw material value was 1,000, but we have to pay 900 because 100 is discounts, right? So everybody's okay with it?
Yeah. Okay.
So can we move on to the next, number 2?
Yep.
Okay, let's move on to number 2. If you do not understand, stop me, right? Number 2 is purchase land 2000. Anybody else? Give me the answer for purchase land 2000.
Land account debit.
Yes.
Cash account credit.
Yes. So land account debit, and cash account credit. Amount is 2000. 2000. Number 2 is finished. Number 3. Number 3 is dividend outstanding 100. Anybody please say something, not just only one student, other student also have to give me answer, right or wrong, no problem. Or I call your name and then you answer.
Yeah, probably.
Okay, so Han, please tell me what is the answer. Fan Han. Can you hear me? Fan Han, can you give me answer? I don't know, no answer. So anybody, anyway, anybody else, just give me answer for 3.
Uh, Dividend expense debit.
Yes.
And liability credit.
Which liability?
What?
Which liability? You said liability is credit. Which liability?
Outstanding expense.
Yes, outstanding which expense?
Dividend expense.
Yes, so dividend expense debit because it's expense and we haven't paid it, it's outstanding. That's why outstanding dividend credit, right? So dividend expense account debit and outstanding dividend expense accounts credit. This is outstanding, or OS, abbreviation of outstanding. Amount is 100. Any question or move on?
Yeah, just move on.
Okay. Number 4 is unearned income 2000. Yes, tell me. Just better
So
speak.
we have cash account for debit 2000 and unearned income credit 2000.
Yes. So unearned income, another name of unearned income is any kinds of income that we receive in advance. So that's why cash debit, because cash in, assets increase. So cash accounts debit, right? And unearned income, it's a liability, right? Unearned income accounts credit. Right? Amount is 2000 and 2000. Let's move on to next if no question. Number 5. Number 5 is borrowed money from bank 1,500. So tell me, borrow from bank.
Cash. Cash account debit.
Mhm.
And bank loan account is credit.
Cash account debit and bank loan accounts credit. Cash accounts debit and bank loan accounts credit. Amount is 1,500. Okay. Number 6, depreciation on car is 10% of 10,000. So tell me.
So we have non-cash expense for debit 1,000.
What is the name?
And
What is the name of expense?
I choose non-cash.
But you have to go specific because sometimes we have some other non-cash expense as well that I may not discuss before. So depreciation is not only the expense which is non-cash. We may have some other non-cash expense as well. All right, like as machine sold on a loss. If you sell your machines on loss, so that loss is a non-cash. All right. So you have to go specific. Instead of saying non-cash expense, better say depreciation expense because depreciation is also expense. All right. So just say
Yes.
depreciation expense, and obviously depreciation is a non-cash expense. So number 6. So what is the journal entry?
So depreciation expense debit for 10,000 and cash. Oh no, I said car account credit for 10,000. Oh no, sorry, 1,000 for each.
Yes, 1,000 for each. Depreciation account debit and car, right? It's a car. What is that? Yes, it's a car. Car accounts credit. 1,000 and 1,000. 1,000 is a 10% of 10,000. It's a 1,000. Okay. Let's move on to number 7. Number 7 is outstanding wages, $80. Number 7, yes, outstanding wages is $80. So anybody? Say something.
Wages expense is debit.
And
Liability account is credit.
which liability?
Outstanding expense.
Which liability?
Outstanding.
Wages.
Yes. So you have to go specifically again. So
Okay.
this is same like as dividend, right? So wages, expense accounts, debit, which is 80, and outstanding wages, expense accounts, credit, which is also 80. Okay. Number 8.
We have account receivable for credit, for debit.
Wait, let me read number 8 so other students can understand which one is number 8. So number 8 is the product sold to customer on credit at 5,000. Yes, now tell me.
So I have account receivable for debit 5,000 and selling products credit for 5,000.
Yes, so accounts receivable, account debit. So always remember, if the question do not give the name of account receivable, then you use account receivable. But if they give the name of the person, let's say Mr. A. So purchase raw material on credit from Mr. A. So then you will not write account receivable, then you will write Mr. A. In bracket, you write Mr. A, in bracket, you write account receivable, or account receivable in bracket, you write Mr. A, all right? But if it doesn't say anything name of any person, just simply say account receivable, right? So account receivable, account debit, and sales or revenue, right? Amount is 5,000. Number 9. Number 9 is 50% account receivable become bad debts. So
Bad debts account is debit and account receivable is credit.
that's it.
Yeah.
Anything else?
Debit each is to 2,500.
That's it.
Yeah, I think so.
Hasn't finished. This one is right, but it hasn't finished. It hasn't finished. Anybody else? Anybody else? Okay, let me explain you. So now remember, for example, bad debts. Let's say bad debts are $1,000. Not bad debts, sorry. Not bad debts, let's say account receivable. So account receivable were $1,000. Now, if I say 20% account receivable, 20% account receivable bad debts. What does it mean 20% account receivable bad debts? 20% account receivable bad debts means 20% account receivable do not pay, all right? So what does it mean? 80% pay. 80% pay. You are giving me journal entry only for this information. You are not giving me information about it. 50%, right? Let me check one more time. It's 50%. 50% not paid because they bad debts, but 50% paid. But you did not say anything about 50% paid. 50% no pay means obviously 50% are paying. Today is a time to pay. Only I received 50% money. So means 50% I did not receive money. Or I did not receive 50% money. So which means I received 50% money. But you have to record both. How much you receive, which is cash, and how much you do not receive, which is bad debts, right? So now you have to complete this journal entry. So complete this journal entry and tell me how much is this.
Is it that we have to add in account payable credit for 2,500 and then account receivable?
Why accounts payable?
Because the customer pay by credit, right?
No, it doesn't say customer pay by credit.
Because number 8 is that sell on credit, so
Sell on
I
credit.
guess that
Sell on credit doesn't mean that customer pay by credit card. Sales on credit means customer become account receivable. Okay.
Okay, so how about cash debit for 2,500 and liability credit 2,500?
Which liability?
The bad debt.
Bad debt is a liability. Can you go and check your liabilities? Did I say that bad debts are liability? Go and check. Bad debts are not liability.
Expense.
Yes. So and you said that because sell on credit, so that's why credit card. Not sell on credit means customer are not paying you money right now. Customer will pay you money later. That's number 8. Right? Number 8 is a product sold to customer on credit 5,000. So means customer paying, not paying right now. That's the meaning of credit. It doesn't mean that customer pay by credit card. All right. It's simply sell product on credit. That's the meaning of this. Right. So do it again and then tell me. And make sure you take a picture of these journal entries because screen going to log out after 1 minute. So at least I'm also recording this session, but in case you need to recheck now, so you can check it.
Oh, okay. So cash account debit is the 2K and a half, and bad debts is also debit and 2K and a half, and the credit is account receivables is 5,000.
Yes. So yes, that's right. Bad debts debit 2,500, cash debit, which is also 2,500, and account receivable credit. So it will be cash account debit because we receive cash. Bad debts account debit is expense, it's a loss, but we did not receive, or we did not receive cash. All right. And account receivable accounts credit. So this is 2,500. This is 2,500. And this is 5,000. Right? Is that okay with everybody? Any question for number 9? Any question for number 9?
No.
No, so okay,
No.
move on to the next, number 10.
Dividend outstanding.
Sorry? Any question, number 9?
No.
Okay.
Yes.
Number 10 is a purchase raw material by cash, 1,000. Tell me, what is debit, what is credit? Purchase raw material,
Raw material is debit, and cash is credit.
raw material expense,
Yeah.
accounts, debit, and cash account, credit. Amount is 1,000. So number 10 is finished.
So the raw material can be either expense or assets, right?
No, you cannot recognize as assets because, as I told you, it will be recognized assets if it's unsold. You haven't sold it. If it's closing inventory, this is not a closing inventory, which is a buying inventory. So inventory, if you are buying inventory, it will be treated as an expense. All right. So that's why raw material expense account debit. All right. So keep in your mind, material could be your assets if it's unsold. We are buying it. We haven't used it. You buy, you use, and left, then call unsold. Right? But we are not. We have to buy first. So you are buying first time. So when you're buying first time, it will be recognized as an expense. Right? This is called the material cost.
Thank you.
Number
Sorry, but then why the first one you said that it is raw material purchase?
raw material. Yeah, raw material. Yes, raw material purchase. Purchase means expense. I didn't say raw material unsold. Raw material purchase accounts or raw material expense accounts. Yes, it's the same thing. So if I last time, if I said raw material purchase, if you want, you can fix it to raw material expense. But remember, when you buy raw material, it's always treated as an expense. So you call it raw material purchase or raw material expense, because if you purchase raw material, it will be treated as an expense. All right. So you can call it raw material purchase or you can call it raw material expense. All right. So that's why last time I may write raw material purchase accounts, but now I'm writing raw material expense account. So better you use expense or purchase is up to you. Better you use expense. Right. So very clear. So you're not going to confuse yourself if you're writing expense. Otherwise, you will confuse again. Is it unsold or is it what or this and that? But this is not your assets right now. It will be treated as an expense. That's where debit, not debit because of its assets. It will be asset if it's unsold, if it's closing inventory. If I say closing inventory, then you will be treated as a closing inventory. Closing inventory accounts debit. All right. Number 11. Number 11 is company sold 1,000 share at 12 each, where par value is 10 each. Can you tell me, did I teach you share premium last time in equity?
Yeah.
Right? Okay. Then okay. So I repeat, number 11, companies sell 1,000 share at $12 per share, $12 each, where par value is $10 each. So what is the journal entry?
Cash is debit is 12,000.
Yes.
Share capital is 10,000 and share premium is 2,000.
Yes. So cash account debit because cash in $1,000. Cash increase, oh sorry, cash increased by $12,000. And the value of share $10 each. So $10 multiplied by 1,000 is a 10,000. Share capital accounts credit, and share capital is a credit because it's an equity. All right. So if you go and check equity increase, share capital increase, equity increase. If equity increase, equity credit. So equity credit by 10,000 because $10 each, and share premium account credit. Share premium also your equity. If equity credit, equity increase credit, which is 2,000. All right, so that's your number 11. Is that okay, everybody? Number 11. Can we move on to number 12?
Yes.
Yeah. Yes.
Okay. So number 12 is 25% of 2,500 bad debts, which is from number 9, are recovered. 25% of 2,500. So means we had 50% bad debts, right? 50% bad debts. 50% bad debts were 2,500. In this 50%, 25% of this already paid it. Means 25% of 2,500 is recovered. You recover. That's the meaning of number 12. So tell me, what is the journal entry for number 12?
So the cash debit 625
Yes.
and the receivable credit 600.
Accounts receivable credit 600, right?
Yes.
Why account receivable credit? Why account receivable is credit? Account receivable credit last time already. When you look at your, when your account receivable become bad debts, means remember, cash debits, bad debts, debit, right? And account receivable credit already, number 9. Account receivable already credit, which is 5,000. If you make it for number 12, this is number 9, right? Number 12, you said cash debit. Yes, cash debit because they already paid you. But if you account receivable credit again, it will increase account receivable. Means you are credit account receivable 2 times. Here credit already, but why you credit here again? So account receivable cannot be credit. So what is credit?
I think it is
So cash debit and
income.
why income means revenue.
Yeah.
Revenue already credit last time when you sold your product, maybe number 8. If you have a look, number 8. Yes, product sold to customer. So product sold to customer, account receivable debit, income credit, sales credit, revenue credit. So income already credit in number 8. So if you credit again, your income will be credited 2 times. You're selling product 1 time, but you're receiving money 2 times. That's the meaning of this, right? So what should be credited? Go back and check my previous lecture when I explain about bad debts. When I give you guidance over the bad debts, you go and check. What did I explain about when you receive money from bad debts?
You have not explained that last time.
I didn't explain you receive money from bad debts. Did I explain it?
No.
Only explain that when account receivable do not pay you back, so either it lost, cost, or expense. You didn't mention how they pay back.
Let me check one more time. So you already understand what is bad debts, but sometime bad debts, they decided to return you some money. Here they become bad debts. They're not going to give you this money, right? You're not going to get this money. But later they decided to give you money back, right? If they decided to give money back, this is called bad debts recovered. You're recovering money from bad debts. So cash accounts debit and bad debts recovered account credit. So cash account debit, which is 625. 625 is a 25% off 2,500. And bad debts recovered. Bad debts recovered account credit, which is 625. All right. So that's your number 12. Is that okay, number 12? So cash debits and bad debts recover credit. Bad debts recover, why bad debts recover credit? Because now that bad debts become your income. You recover money from them, right? If you recover money from them, it's become your gain. Before it's loss. Before it's loss. That's why you record it as a debit here. Before it's loss, right? Before it's loss. That's why record it as a debit. Now you will record as a bad debts recovered. Bad debts recovered credit. Now you will record as a credit because it's become your gain. Loss and gain, loss debit, gain credit. All right. So that's why bad debts recover credit. Not because bad debts recovered liability, that's why credit, because I didn't teach you bad debts recovered a liability. All right. So it's considered as your income. Something you were not expecting because you already expected them as a loss, 50%. But unexpectedly, your loss turns into income. So before you record it as a loss, that's why number 9, bad debts debit. But number 12, that loss turns into credit. Turns into income, gain. That's why bad debts recovered credit.
Okay.
All right. So that's your number 12.
Got it.
Is that okay, number 12? Any question, number 12? Any question?
No.
No question. So let's move on to number 13. Number 13 is interest received 200. Interest received 200.
I have cash account for debit 2,000,
Yes.
200, and interest income credit for 200.
Yes. So number 13, cash accounts debit, cash account debit, and interest income account credit 200. All right. Let's move on to number 14, tax paid to government.
So is tax expense debit for 250 and cash account credit for 250.
Yes. Right. Number 15. Number 15 is equipment sold at loss of 1,000.
What does it mean by sold at loss? It means you don't receive the money.
Okay, now what does it mean loss? Loss means, let's say your mobile phone is $1,000 and you're selling at $800. So $200 is loss. All right, that's the meaning of this. You're selling at loss. You have a house, $50,000, but you're selling at $48,000. So you have $2,000 loss. So what is debit? What is credit?
Huh?
Tell me for number 15. You have a loss on sale of equipment. So loss always
Debit.
debit. So loss debit, right?
Yeah.
And what is credit? Loss expense. Loss expense. Don't need to write loss expense. Either loss or expense. Right? Loss is no need to say loss expense. Just say loss on sales of equipment debit. Okay. Items account. Now, what does it mean? Item. I don't know what is item means.
Equipment.
Equipment. Yes. Equipment credit. Right. That's right. So loss on sale of equipment account debit, right? Loss on sale of equipment account debit and equipment account credit, right? I think 1,000. Yes, 1,000.
So it is assets, right?
Yes, equipment is assets. Okay, it's okay. So yes, equipment is, if your mic is not working, you can send me a text message if in the chat box if you have any question. Okay, so yes.
in the 14th. So tax, we have to write down the expense, or just tax is okay.
Okay, better write expense to make it things clear. So wherever you have expense, write expense. That's I think that's okay. If you write, that's better if you write expense, tax expense. Because sometimes tax you can also get refund from government, but that will be credit. You don't always pay tax. Sometimes you get some tax return back from the government. This is called tax refund.
Oh, okay.
Tax refund is your income. So of course, the tax refund will be credited, but that's fine. So so tax expense. So like a salary expense, rent expense, wages expense, interest expense, dividend expense, tax expense, interest expense. So, yes. So any other question? Any questions from this homework? Yes or no? Any question?
No, I think not.
Can I ask about the number 6?
Yes.
Like why is called the credit? The number 6.
Number 6. Let me check what is number 6. Number 6 is depreciation on car is 10% of 10,000. Okay, so your question is why car is credit? Okay, now what does it mean depreciation? Depreciation means the value of assets goes down. Value of car goes down. So car value reduce. Car is assets. Assets value reduce. So that's why if assets value reduce, assets will be debit or credit?
Will be credit. It will
Credit.
be credit.
That's why car credit.
Okay, thanks.
Same thing happened in number 15. You sell equipment. Equipment reduce. So equipment credit. All right.
Okay.
Okay, so now I think I need to give you one more work to practice, and then we will finish the journal, then we move on to step 3. But I think you need one more journal entry. But this time, journal entry, I improved the level, difficulty level of journal entries. So it's gonna be a little bit more complicated. So let me show you, and you can take a picture, or anyway, I will send you the file. So you don't have to take a picture, you can keep the file. So number 4 is rent expense outstanding $100. Number 5 is a 50% of amount do not paid by Ethan. So Ethan become bad debts. Number 6 is material purchase from Jennifer, 20% credit and 80% cash. The value was total 1,000. Number 7, material returned to Jennifer, which is bought on credit. Number 8, land purchase at 10% discounts, value at 20,000. Number 9, borrowed money from bank 7,000 is returned, right? Number 10, product sold to Kelly at 5% discounts on credit, value 2,000. Number 12, service performed to JJ for 8,000 only. It's a 8,000. 8,000. Payment made to accounts payable 1,000. Unearned income returned to JJ. So this is your 14 journal entries. Now let me explain you about purchase and sales return. What is purchase and sales return? So purchase return. Purchase return means sometime when you purchase raw material from supplier, but because of the quantity or quality reasons, you return material back to supplier. If you return material back to supplier, your cash will be in, right? So cash will be debit, and credit is a purchase return, material purchase return, right? Material purchase return. So return material back to supplier. Return material back to supplier. That's called purchase return, right? Next is a sales return. Sales return means product that you sold to the customer is returned, right? Product is returned by customer. Customer return product back to you. If customer is account receivable will reduce. If customer is just cash will reduce because you have to give cash back. Like as purchase return, you receive cash back and you return your material. Same thing, sales return, you have to give cash back and take your product back. All right. So take your product back means sales return will be debit, right? And cash credit or account receivable credit. Depends, is it cash or is it credit, right? So these are the purchase and sales return.
What are the natures of two accounts right here?
They are just like here, purchase, material purchase return account, sales return account. They are just accounts. So, okay, what is the nature? Sales return means your sales will reduce, income reduce, all right? Purchase return means your expense reduce because you return, you didn't buy it, you didn't keep it. So you didn't buy, no expense. Sales, you didn't sell because whatever you sold, customer returned back to you. So your income reduced. When customer gives your product back, for example, product has a quality problem, low quality, product will return material back, customer return product back to you. So it's become your loss, means your sales, not loss, but it's your sales will be reduced, right? So that is the reason it will be considered as your low sales expense, right? Income reduce, sales return, expense reduce, purchase return. Is that okay?
Yeah, okay.
So any questions, or we move on to the question now? Practice question that I just sent it to you. Did you receive file? Did you receive? Okay. So so just let's doing that question. So I'll give you 10-15 minutes, right? And then you practice. You complete that question and then I will check. So if you want to ask me anything, you can ask. What is selling common share? Okay, no, don't worry about common share. Just keep in your mind share. There are two types of shares. I think I haven't explained to you, or I don't know. Did I explain you common share, preference shares? Yes or no? Did I explain you common shares?
Yeah, you did.
Yes. So yeah, it's it's a common share. So one student asked me a question. What is selling common share to shareholders? Selling shares. Common share means selling shares, right? Share capital, common share capital. So now start with the first journal entry, which is a business started by borrowing from bank, 7,000, and selling common share, 10,000 to shareholders. So tell me, what is the journal entry?
So we have cash debit 17,000,
Yeah,
liability credit 7,000, and income credit 10,000.
no. Which liability?
Bank loan.
Yes, so you have to go specific bank loan. But if in your exam, if you write liability, you are wrong. You have to go
Okay.
specifically bank loan credit. Bank loan credit, and what else you said? Income?
Yeah, income from selling the common share.
Selling common share is your income?
Revenue.
Is
It's
it your
share capital.
Yes, it's a share capital. So cash accounts debit, cash account debit, total 17,000. Bank loan account credit, and share capital account, right? Not revenue account. Selling share is a share capital. I think this is the same thing we did it last time too. Right? Is that okay? It will be share capital, not revenue. Revenue means selling product and services. This is not an income. It's your equity. It belongs to your equity. That's why your share capital will be credited, right? Next, product sold to Ethan, number 2.
So it is Ethan account payable, the debit for 2,000, and sell
Accounts payable. Why accounts payable?
no, I mean, account receivable.
Account receivable, right? So Ethan, in the bracket, account receivable, account debit, and revenue.
Yes.
Revenue account credit. Amount is 2,000. Right? Next, number 3. Number 3 is 25% product returned by Ethan. So
is that return product account debit 500 and cash credit for 500?
you said return product, not return product, sales return. Remember sales return? Return product or sales return, better say sales return. Sales return account debit. Amount is 25%. 25% will be 500. 500. And what is credit? Cash
credit.
Why cash?
Because you have to give the money back.
Did you take money back before? Did you take money from the Ethan before?
No.
No. So no cash. So what will be credit?
Unsold.
Why
Unsold
unsold?
product.
Why unsold product?
So is that Ethan account receivable?
Yes, Ethan account receivable credit. Ethan account receivable account will credit. Right? Account receivable are reduced. If they return money back to you, they will be reduced. All right, so that's why account receivable credit. Right? Number 4. Number 4 is rent expense outstanding.
So the rent expense is debit 100 and outstanding rent account credit for 100.
Rent account debit 100 and outstanding rent account credit 100, right? Number 5. Number 5 is 50% amount do not paid by Ethan. So tell me.
Bad debt account debit for 1,000
Okay.
and Ethan account payable credit for 1,000.
Why accounts payable?
Because the debt from Ethan.
Yes. No, it's not right. Anybody else?
Is that Ethan account receivable credit?
So tell me the full journal entry.
So the bad debts were debit 1,000 and Ethan account receivable credit 1,000.
Finish? Is that finished?
I think it is cash debit is 750 and bad debts expense debit is 750 and account receivable from Ethan is 1,500.
Yes, that's right. Cash account debit, bad debts accounts credit, and Ethan, who is account receivable, account credit, right? Now, look at the amounts. If you look at number 2, you sold product to Ethan 2,000. But number 3 says that Ethan returned 500 back. So account receivable value is 1,500. In this 1,500, 50% are bad debts and 50% already paid, right? 50% already paid. So bad debts are 750 and cash is 750. So that's why cash account debit 750, bad debts debit 750, and Ethan credit 1,500.
But you made a mistake at bad debt. Bad debt. This not CR.
Sorry, yeah, thank you. It's DR. It's DR. DR, yes. So cash account debit, bad debts accounts debit, and Ethan credit. Right. Is that okay, everybody? Number 5.
Yes.
Let's move on to number 6.
Yeah, okay.
Okay, let's move on to number 6. Number 6 is material purchase from Jennifer, 20% credit and 80% cash.
Is it material purchase expense debit for 10,000 and cash credit for 8,000 and account payable Jennifer account or credit 2,000?
Yes, that's right. So number 6, material purchase. So material purchase expense or material purchase or material, yes, material purchased or raw material expense, anything. Material expense or material purchase, account debit, cash accounts, credit, and accounts payable. Or we can write Jennifer, accounts payable, account credit. So cash, 80% cash. So 8,000, right? And 2,000 credit, 20,000 credit, 20%, and 10,000 is the value of material. Right? So number 6 is finished. Is that okay, number 6? If number 6 is okay, let's move on to number 7. Number 7 is material returned to Jennifer, which bought on credit. Tell me, what is debit, what is credit?
Account payable, Jennifer account payable debit for 2,000 and material return credit for 2,000.
Yes. Jennifer, accounts payable, account debit, and purchase return or material purchase return or material return, whatever. Purchased, return, account credit. So it will be 2,000. Because we only return credit purchase. That's why only 2,000. Number 8. Number 8 is land purchase at 10% discounts valued at 20,000. So what is debit? What is credit? Tell me, anybody?
So number 8, the land account is debit 1,800 and the cash credit, the cash credit 18,000.
Can you tell me again? Land
The land account debit 18,000
Mm-hmm.
and the cash credit 18,000.
But land value is 20,000. Land value is 20,000.
So we have discount received credit for 2,000, so the total is 20,000.
Yes. So land account
So
debt.
like
Yes.
20,000.
Yes. Land account debit 20,000. Cash account credit. Land value is 20,000, but we are paying cash 18,000.
18,000.
Right.
Okay.
And then discounts received on purchase of land. You can say that. Discount receive account credit 2,000. Right. So total is 20,000. Number 9 is borrowed money from bank 7,000 is returned. So
Bank loan return debit for 7,000 and cash credit for 7,000.
yes, bank loan return or bank loan debit, anything. Yes, bank loan return accounts debit and cash account credit 7,000. 7,000. Number 10, product sold to Kelly at 5%. Number 10, product sold to Kelly at 5% discounts on credit value 2,000. What is debit? What is credit?
Debit is Kelly account receivable for 1,900. Sell account credit for 2,000 and discount pay credit for 100.
Discount credit?
Oh,
Sorry,
discount.
discount pay
Yes, credit or debit?
credit.
Credit? Why
Credit.
credit? You are paying discount or you're receiving discounts?
That you pay this for Kelly. Kelly received the account from us.
Yes. So you are making journal entry for Kelly or you making journal entry for you? You making journal entry for company or you making journal entry for Kelly?
So it's debit.
Yes, this is, remember, you are a company, you are not a customer. You are a customer if you purchase anything. Whatever you are doing from company point of view. I think the same thing I explained you last time too. If Kelly will do journal entry, Kelly point of view, still you are wrong. Company point of view, you are wrong because you are selling. You are selling. So when you sell, you pay discounts. When you pay discounts, is it your income or is it your expense or is it your loss?
It's been a loss.
It's
So
expense
it's
loss.
debit.
So yeah, it's debit. It cannot be credit. All right. So
Okay.
what is journal entry?
So again, is a Kelly account receivable debit for 1,900.
Yes.
Discount pay debit for 1,000 and sell credit for 2,000.
Yes. revenue. I think we should use revenue. Remember one thing. Here, number 10, you are selling product. Number 2, you also selling product. If number 2, you are writing revenue, the word revenue. In number 10, you also write the word revenue. If in number 2, you're writing the word sales account, then number 10, you should write sales accounts. Means if wherever you use the word revenue, so whole question, whenever you sell product, you use the word revenue. All right, so keep in your mind. Why? Because when you do step 3, otherwise you will be mistaken in your step 3 when you do step 3. I will explain you later why you have to follow the same name, same title of the accounts every time. Right? So how much is a 5%? So 5% is 100, right? So 1,900. So it's a 2,000. Revenue accounts, credit. All right, so that's for number 10. Number 11. Number 11 is income received in advance from JJ, value 10,000.
So the cash gonna be debit 10,000 and unearned income from JJ is credit 10,000.
Yes. Cash debit and income on JJ.
That should be unearned income, isn't it?
Oh, sorry. Unearned income. Yeah, sorry. I'm writing unearned income, unearned income, unearned. All right. Credit amount is 10,000. And 10,000. Right. Number 12, which is service performed to JJ for 8,000 only.
Unearned income debit 800 and sales credit 800.
Yes. Unearned income is debit, and revenue, we use the word revenue because everywhere we using the word revenue. Credit 8,000 and 8,000. Number 13 is payment made to accounts payable 1,000. Tell me, debit or credit? What is debit? What is credit for number 13?
So account payable, debit 1,000 and cash credit for 1,000.
Is accounts payable debit and cash credit. Number last, number 14. unearned income returned to JJ.
So unearned income JJ debit 2,000 in cash, credit 2,000.
Yes. Unearned income is debit and cash credit 2,000 and 2,000. So that's all. So all the journal entries are finished. So any questions you have regarding these journal entries?
I have questions for number 12.
Yes.
Why the debit account is unearned income?
Because unearned income reduced, your liability reduced. Because when your unearned turns into earned, unearned reduce. Before unearned was 10,000. That's why 10,000 credit in 11. But you start working. So unearned reduce because you start working. So when unearned will reduce, unearned will be debit. So your liability reduced. That's the meaning of unearned income. Unearned income is your liability, right? So when you receive, I pay you all money, but you haven't worked for me. So this is your liability. That's why cash debit, liability credit. But when you start working for me, means you start providing me service. Start providing me service, you start earning money. Earning money means unearned money will be reduced. So unearned will transfer to earn. That's why earn or debit, revenue. Revenue means earn credit. All right, so that's why earn debit.
Okay, and for number 13, does it mean that payment made to account payable, like you deposit the money into your bank account?
Okay, so remember, sometime if you go to internet, if you search or if you look at sometime in your textbook, sometimes they use the word bank loan, or sometimes they exchange the word bank loan with accounts payable. Accounts payable means for someone to whom you have to pay money. All right, accounts payable has a two meaning. Let me explain. Accounts payable has a two meaning. If you look at your textbook or internet, accounts payable is a someone to whom you have to pay money. Pay money, right? This pay money could be a bank loan because you borrow, and this pay money could be supplier. All right. So accounts payable, sometime accounts payable word used for bank loan, and sometime accounts payable word used for supplier. But I want to make it very clear. So just use the word accounts payable for supplier. Supplier means all right. So that's why sometimes accounts payable is a bank loan. But as I said, so when you see the question in your exam, accounts payable means I'm talking about purchase supplies. I'm not talking about bank loan. But of course, that could be a bank loan. But as I said, I will not gonna make you confused. I will make it simple. Accounts payable means supplier. We purchase on credit, right? That's called accounts payable. If you purchase anything on credits, right, that person will become your supplier, will become your accounts payable. But bank loan also accounts payable too. But don't worry about it because we use the word bank loan for bank loan, right? So, but I use the word accounts payable for supplier. So here we are talking about purchasing material. Number 13, purchasing material. As you can see, number nine, I use the word bank loan, right? Or number one, I use the word bank loan. I didn't say that accounts payable credit in number one. So see, so I'm using accounts payable for purchase, any kinds of purchase. That is your accounts payable. Is that clear? Is that okay?
Yes.
Okay, so let's move on to the next, which is step 3. Step 3 is a ledger. If you have a look, your step 3, ledger. Another name of ledger is a T accounts. So let me explain you step 3 of your accounting cycle. So step 3. Step 3 of your accounting cycle. So step 3 is a ledger. Ledger. Another name of ledger is a T account. Right. Now, what is the purpose of T accounts, or what is the purpose of ledger? Ledger help us to classify information. So ledger means classification. Classify information in various accounts. In various accounts. We gonna prepare one by one all the accounts. All the accounts means whatever accounts are affected here, like a cash account, bank loan, share capital. So you can see 1, 2, 3, 4, 5, 6, 7, 8, whatever, right? 10, 14, 15, whatever accounts are affected here, we gonna prepare them separate to understand the movement or the balance of separate account, right? For example, by looking at these 14 journal entries, in some journal entry, cash in, which is debit, and in some journal entries, cash out, which is credit. So can you tell me, by looking at all these 14 journal entries, can you tell me how much cash do we have? Can you calculate that? Is it easy to calculate? I repeat my question. These are the 14 journal entries. In some journal entries, you will see cash in, which is debit, and in some journal entries, cash out, which is credit. So sometime in, sometime out, sometime in, out. So can you tell me, by looking at these 14 journal entries, can you tell me how much cash is left? In, out, in, out. So how much is left after these 14 journal entries? Is it easy to find, or it takes time, or it's difficult to find?
It takes time to find.
It takes time to find. So that's why we're gonna prepare a separate T accounts for each and every account. So with the help of these T accounts, within few seconds, we can simply understand how much cash do we have, or how much share capital we have, how much revenue we actually sold, because sometimes we sold and sometimes we return. So how much is left, right? So that's the reason we're gonna prepare T accounts. So in T accounts, we classify all information in a separate account. This is called a T account, right? So now I'm going to make some journal entries, some random journal entries to explain you how to prepare T accounts, all right? So remember, T accounts depends upon your journal entries. So let me write down journal entries, then I'll teach you. So let's say cash, debit, sales, credit. These are just random journal entries, so don't worry about that where I get it. Okay. So this is your so this is your step 2, right? Now we're going to make a step 3, which is T accounts. Right? Now, why we call it T account? So this look like this T. T means, so remember the left hand side. Of course, here you can see, right? Left hand side is a debit side. Your left hand side is a debit side, and your right hand side is a credit side. All right, so that's why we call it T account. So 2 sides you have, right? In reality, it doesn't really look like T. In reality, it looks like this. In reality, it looks like this. It looks like T accounts, you can see. It looks like T. See, it looks like T. So this side is your debit side, this side is your credit side. This is the name of transaction. This column for amount which is debited, and this is the name of account, and this is the amount which is credited. So that's why this is called the T accounts, right? So debit side, so remember left hand side, always remember left hand side debit, and right hand side is credit. So debit side, credit side, right? So this is the basic things you need to know about T accounts, right? That's all. Now, following your, now you have to transfer journal entry into T account. So you have to prepare T account first, right? So cash accounts. So first T accounts is this, cash accounts, right? So right here, cash accounts. Second is a sales account. Sales account. Third is a material expense account. Material expense account. Next is the cash account. So remember, we will never repeat any account again. If you already prepare cash account, that's it. So every accounts will be prepared at once. You cannot repeat it. You can't prepare two cash accounts. You can't prepare 2 sales accounts or 2 material expense accounts. One account, only one time. So cash accounts already. Land account. Cash accounts already. Account receivable account. Right. Sales account. Sales accounts already. Interest expense account. Interest expense account. Cash account already. Right. So we prepare the T account format first. Everybody understand this one? Is that okay?
Yes.
Okay. So now, most important thing, we're gonna transfer all this information, all this 5 information here, all right, in this T account. So let's start with the first. So remember, look carefully. Cash account debit. Remember, look, cash account debit 100, cash account debit 100 because of sales. So I write here sales. Sales amount is 100, right? Sales credit because of cash. Sales credit because of cash, 100. Understand? I repeat again. Cash account debit because of sales. Cash account debit. Remember, this is debit side, this is credit side. Everywhere, debit side and right hand side is credit side. So cash account debit because of sales. Cash account debit because of sales. Sales account credit. Sales account credit because of cash. Because of cash. Right. Next, material expense debit because of cash. Material expense debit because of cash. Amount is 200. Cash account credit because of material. Cash account credit because of material expense. Material expense amount is 200. Right. Next, land debit because of cash. Land debit because of cash. Amount is 1000. Right. Cash credit because of land. Cash account credit because of land. Amount is 1000. Now, number 4, account receivable debit because of sales. Account receivable debit because of sales. All right. Amount is 2000. Sales credit because of account receivable. Sales credit because of account receivable. Amount is 2000. Right. Interest debit because of cash. Interest debit because of cash. Amount is 50. Right. Cash credit because of interest. Cash credit because of interest expense, which is 50. All right. Now understand? Is that okay?
Yes.
Okay. So can we move on? Can we move on to the next?
Wait, teacher, can you repeat it again? Because it was so fast for me. I'm sorry.
Okay, no, it's okay. So remember, we prepare T account first. So cash account, sales account, material account, cash account already. Land account, cash account already. Account receivable account, sales accounts already. Interest expense accounts, cash accounts already. All right. So you prepare the empty formats without any numbers. Right. Once you preparing all the formats, now you're transferring information in the formats, which is I wrote in a blue color. So now, how we write this? Cash. So remember, cash account debit. Why cash account debit? Because of sales. So cash account debit. This is debit, right? Cash account debit because of sales, right? Sales credit. Why sales credit? I mean, because we receive cash. Cash debit, that's why sales credit. Sales credit because of cash, 100. Material expense debit. Material account, material expense account, debit. Why? Because of cash. Because of cash. Because we paid cash, right? Cash credit because of this. Cash credit because of this, right? Land debit because of cash. Land debit because of cash. Cash credit because of land. Cash credit because of land. All right. Account receivable debit because of sales. Account receivable debit because of sales. Sales credit because of account receivable. Sales credit because of account receivable. Interest expense debit because of cash. Interest expense debit because of cash. Cash credit because of interest expense. Cash credit because of interest expense. All right? Is that okay?
Yes, it's okay. Thank you.
Okay. So let's move on to the next, which is now we have to find the balance. We already finished all the transaction. Now we have to calculate how much is the balance of each T accounts, right? So let's start with the interest expense. So interest expense, credit side 0, debit side 50. So interest expense has a debit balance. Understand? Credit side 0, debit side 50. So interest expense has a debit balance, right? Account receivable. Credit side 0, debit side 2000. So account receivable has a debit balance. Land, credit side 0, debit side 1000. So land has a debit balance. Expense, credit side 0, debit side 200. So material expense has a debit balance, which is 200. Right? Sales, debit side 0, credit side 2100, which is credit. So sales account has a credit balance, which is 2100. Now, cash. So you have debit balance, some amount debit side, some amount credit side. All right. So now remember one thing. If your debit side is greater than credit side, your balance will be debit balance. Debit balance means the difference between debit and difference between credit. Whatever is the difference, that will be debit balance. If your credit side is greater than debit side, so you have a credit balance difference. Credit balance difference. Whatever is difference, that will be treated as a credit balance, right? So I'll show you what does it mean. Look, in your cash account, debit side is 100. Debit side is 100, right? Credit side is 1250. So credit side 1250. So credit side is greater than debit side. Credit side is greater than debit side. So your balance is a credit balance. Credit balance, right? Your balance will be credit side. You will write the answer on the credit side. And how much? Difference. Difference is 1150. 1150. So this is the credit balance 1150 of your cash account. 1150. That's it. Understand? So always check if you have balance are two, if balances are one side. If your balances are one side here, so then okay, then simple, because this minus this will be this. This minus this will be this. All right. So 200 minus 0 will be 200, right? So, but in cash accounts, you have balance both sides. So you find how much is a debit side balance, how much is a credit side balance. So if your credit side, as I said, if your credit side is more than debit side, your balance will be credit balance. And how much? How much is the difference? Difference of this and this amount, right? Difference. How much is the difference? So debit side is 100, credit side is 1250. So 1150 is a credit balance. So cash account, credit balance 1150. Understand? Yes or no?
Yes, yes.
Everybody understand? So we're going to finish this one. Step 3 is finished. Everybody understand step 3?
Yeah.
Okay, for
Let's move
now.
on to the step 4. So step 3 and step 4 will be your homework. Your homework will be your 2 questions. All right. Homework will be your 2 questions. One question you did it today, and one question was your previous homework. All right. Did you understand? The question you practiced today, journal entry, that question you will do step 3 and step 4. I'm going to teach you step 4. All right. And the question you did it last week, your homework, same question also you have to make it step 3 and step 4. All right. So now I'm going to show you step 4. What is step 4? Step 4 basically help us to so wait, let me charge my step 3 is so your step 4 is a trial balance. And what is the purpose of trial balance? Trial balance. Trial balance purpose is to check, are we making any kinds of mathematical mistakes, any kinds of plus or minus subtraction mistakes. That's only the purpose of the trial balance. So the main idea of the trial balance is, remember, the basic principle of trial balance is debit side must be equal to the credit side. All right, because in every journal entry we make debit and credit equal. All right, so we want to check again whether we make any kinds of subtraction or addition mistakes when we are transferring information from journal to ledger. Right, in order to check that kind of mathematical mistakes, we will prepare a trial balance. Right? Such kinds of arithmetic mistakes. Now, how trial balance looks alike. Trial balance, it's this. So that's your trial balance format. Trial balance. Trial balance is very simple. You just need to use your ledger to write all the balances. Let's start with the cash. So cash, so remember, this column is a debit balance column and this column is a credit balance column. So cash account balance is a credit balance 1150. So we are writing credit side, right? Sales account, or you can write sales if you want it. Sales account or sales, it's up to you, because account we already prepared it. So sales has a credit balance 2100. Right? Material purchase or material expense has a credit balance, oh sorry, no, debit balance 200. Land has a debit balance, so we write on the debit side 1000. Account receivable has a debit balance which is 2000. Interest has a debit balance which is 50. That's all. This is your trial balance. And we check whether the balance of these two sides is equal or not equal. So it's 2, 3, 3, 2, 5, 0. And this one is 5, 0, 2, and 3. Yes, it's equal. So means we did not make any kinds of mathematical mistakes in our step 2 and step 3. So step 4 is finished. Right? Understand step 4?
Yes.
Everybody's clear with step 3 and step 4? So this is your step.
Yeah.
Let me write down here. That's your step 1, journal entry. This is your step 2, which is, oh no, not step 1, step 2, journal entry. Step 3, which is ledger, and step 4, which is your trial balance. All right. So any questions regarding step 2, 3, and 4? Any question?
No.
No question. So I remind you your homework again. So homework. So you have 2 homeworks, 2 activities. One is today's class, today's lecture. Today's lecture we practice, right? So for today's lecture, you already make it journal entry. You already done it journal entry. You have to make it ledger and trial balance. That's your homework, all right, for today's. And your last homework. So you already done it, your journals for last homework, right? So now you have to make it ledger and trial balance, right? So I think if you do that, you have enough practice for step 3 and step 4. And obviously, if your balance is not matched, so means your question is wrong. Obviously, question wrong means you made a mistake somewhere. Maybe you made a mistake in your journals. Maybe you made a mistake in your ledger, or you making mistakes to transferring information instead of debit column, you're writing in a credit column in your trial balance. Right? So you have to recheck until you get the balance equal. If you still cannot get the balance equal, then of course I will help you to check your homework. All right. So any question? Everybody understand?
Yes.
Yes. So can we stop now?
Yes.
Okay. So next week, we are not sure. Next week we have an online class or not. But anyway, we wait for the office announcements, and then we will arrange classes accordingly. Right? So I'll see you next week. Please send me email if you have any question. Right?
Yeah. Okay.
Thank you.
Okay.
Thank you.
See you next
Thank
week.
you. Goodbye. See ya.
See you.